In this video, I'm going to do a whip around the grounds across Melbourne suburbs that represent good value, good bang for buck, and where the data is starting to look a little bit better that suggests that investor activity is going to rise in the months ahead. So stick with me as we go around the grounds all across Melbourne and pick through a number of suburbs that you may want your eyes on. Let's go. So I'm starting here with the Brimbank Council area. So we're talking about Sunshine really, and the suburbs surrounding Sunshine. Sunshine is an area that's starting to show some level of upside because investors who are looking for affordable areas at low price points with some rental increases, that's where the data is pointing. There is some positive activity in these locations. So let's go through the high level data of this entire area. So stock on market, 0.24%, very, very low. Inventory under 1 month. That means there's not many homes for sale at all at the moment. This bucks the trend a little bit of Melbourne, which has a high number of listings, but it's not in these locations. You have other areas exhibiting high listing levels, but not here, which is really, really positive if you're a property investor. Building approvals, only 183 approvals, 0.26%, very, very low. The hold period here is 11 years. Anyone who buys here wants to hold on to it and never let it go. They will basically want to die in the property. 11 years is a very, very long time, well above the 7 to 8 year average. Days on market about 30, vacancy rate 1.4%, search index a little bit low, and the clearance rate a little bit low. But you can see inventory levels tracking down in this broader location geographic area. Vacancy rates tracking down as well. Building approvals tracking down as well. Stock on market tracking down. There's a whole range of data metrics that suggest let's look into it a little bit closer. And that's exactly what we've done. So let's go into some of the suburbs. So I'm going to start with Sunshine North. Here, the average price is around $780,000. The rent is about $500 a week, increasing with the yield increasing by about 8% this year to 3.37%. Here, Sunshine North, it's viewed 13 kilometers west of Melbourne CBD. When we're talking about these areas, if you're watching this video, you might be like, what? Why is Redham talking about all these, cheaper areas all across Australia? Last video I was talking about Darwin, for freak's sake. What's he on about? Now we're talking about these areas in Melbourne. I'm not talking about, Glen Waverley. I'm not talking about the nicest areas in Melbourne. I'm not talking about areas around the CBD. I am talking about some cheaper areas. When I go to Melbourne, I like being in South Yarra. I like being around these areas, not Sunshine. And I know most people do. But the data and where investors are going, that's a completely different question to where do I want to hang around. Okay, so Sunshine North has a price point of around 780K, rents at $500 a week. It's got some pro points. Its yield is increasing because prices haven't risen much. It's got low stock on market and people have been holding on the property for a long time. But incomes are very, very low here. That's why affordability is pretty tight for its value there. And it's got a low ISAD score. So it's a lower socioeconomic area. Across the board, across most of these locations, we are talking about lower socioeconomic areas. It fits in line with the theme. Affordability, the flight to affordability will continue in 2025. It will continue in Melbourne. That is the theme of property investing right now. And that's why some of the locations we're talking about meet that criteria. It's got a high renter and owner mix, so that's a pretty good sign. Another suburb we can go through is Delahey in the Sunshine area as well. Got to admit, I haven't been here either. It has a price point, a lower price point. It's starting to rise. Rents up over 10% this year. A higher yield as well, about 20 kilometers. So very, very close to the Sunshine area that we are talking about. It's an intriguing option for property investors according to ChatGPT type analysis here. Very, very interesting choice of words. Intriguing as an area to look at. Not very affordable at the moment. The hold period is 12.67 years. Wow. Delahey, hey you don't want to move, hey? People who want to go live in Delahey never want to move. I might want to go check this area out for myself and be like, why does everyone want to stay here? Perhaps it's an older area. But it's got low stock on market, healthy inventory levels, and again, it's a lower socioeconomic area. So many of these areas are going to have very similar sort of frameworks when you look at them and when you look at the data behind them. I'm on H-Tag here. You can go on Microburbs if you want a free source, or you can use this source as well. You have to pay for a subscription to get the analysis here. Deer Park, another area in the Sunshine area as well. This one's pretty attractive as well. I've seen a few property investments. A few people have shown it to me as well as an attractive area to invest, and a few property investments. You can buy a property around $600,000. I've seen properties in around that $600,000 mark, unrenovated typically, but the typical price closer to $700,000, yield around 3.4%, the standard yield in Melbourne. Again, the same story pretty much across the Sunshine area. This is what you'd expect. When you look at an area and you see this sort of demand-supply dynamic where supply levels are pretty contained and demand's starting to rise a little bit, albeit not very much, and it's kind of like a balanced market, you're going to find it when you go into the suburbs in that location, and everything's pretty similar as you go from one suburb to another. You probably will find the more expensive area of this location may start the next wave of activity, and then it'll start spreading across into the cheaper areas of the market. So I've got Idea here as well, which is another area in the Sunshine area. Now, one of the big reasons why Sunshine is attractive is because of its railway station and its link to different areas. It is obviously the regional link to other regional cities, and it has proposed railway links towards the airport as well. So its station is becoming a hub point, and that area is going to have change as a result. You're going to see more uplifting in the area around the key transport infrastructure that's there. You can probably see towers pop up over time. That's all very normal. When you have a very important piece of infrastructure, you want people to live there. And the area is going to change associated with that, which could add in a little bit of demographic change, which can create additional activity over time as well. A lot of this is established areas as well, established housing, so around that key infrastructure pocket. So it's got some longer term fundamentals that become interesting for you to look at if you're looking in Melbourne specifically. Next up, we are going to a different area. We're driving in the car and going for a pretty long drive all the way out to Fawkner from Sunshine to pick our next area of Melbourne that you may want to put your eyes on too. So here you have the buy price, similar in the 750 sort of range. Rents up 13% this year. And because house prices have fallen a little bit over the past year and rents have gone up 14%, the yield has gone rising all the way up to 3.8%. So this is getting into an attractive yield territory for Melbourne. 12 kilometers north of the CBD, traditionally working class area, well serviced by train stations. This is really funny. Key amenities include cemetery. I'm not so sure that you really want to live next to a cemetery, or whether that adds any impact on housing values that's positive at all. In fact, that would probably be a negative. I don't really want to live around ghosts. That isn't my thing, and most people probably don't like that. So anyway, that is what the data metrics say when it's telling me a little bit more about this suburb. You have low stock on market, low building approvals, low inventory levels, high hold periods. The days on market is reasonably high, but it's coming down. A low vacancy rate as well. So there's a lot of things going for it, and its IRSAD score, unlike the other ones in Sunshine, is a little bit higher. It's because we're getting closer to the city, a more premium sort of area. Compared to Sunshine, almost everything is in Melbourne, let's be honest. That is not the nicest part of Melbourne, at least in terms of price point and socioeconomic status. You're improving from Sunshine, so it's got a higher IRSAD score as well. But its affordability is pretty weak, and its market conditions right now aren't particularly strong. It is very much a cold area right now. So there's a little bit of a data deep dive. And unpacking this one a little bit, the typical price of Fawkner. In the last month, it hasn't grown. In the last quarter, it hasn't grown. In the last year, down 1%. In the last 3 years, down 8%. This sums up why it's attractive. We're talking about Melbourne here. We're talking about a suburb 12 kilometers from Melbourne, and we're talking about a time where property prices in some capitals are up 75-80%. Perth, Adelaide, Brisbane. While Fawkner, 12 kilometers from Melbourne, is down 8%. So the relative composition, it's gone through like a washing machine, and now it's like, ooh, this has spud out. 3 years ago, it would have been pretty ugly, but today, when everything else is a bit more expensive, this one sort of stands out where it's like, hey, it hasn't grown much. It is a Melbourne story. The 5-year growth has been reasonably positive. So in 2020, 2021, Melbourne property prices did rise. The 7-year growth cycle hasn't been that great either, 4.7%. So over 7 years, house prices in this particular location are pretty much the same level as they were 7 years ago, or up 5%. If you go back to the old adage that house prices double every 10 years or so, then Fawkner and lots of Melbourne have a very attractive proposition. They haven't risen much for a period of time, but incomes are much higher than 7 years ago. There's obviously a lot more people in Melbourne than 7 years ago, so it is becoming a little bit more attractive today. Perhaps there's some price catch up to be had. And Melbourne's growth cycle, you can see that if you go back in time, 7 years, so 2017, from 2014 to 2017, Melbourne house prices were rising very, very quickly because the 10-year growth rate is 58%. The 7-year growth rate is 4%. Wow, so for a 3-year period, Melbourne house prices went woof. And since then, they've gone poof. They've done nothing. Pretty much jack all in that time period. That is the real attraction to Melbourne. And Fawkner does stand out, and you can see it in the data here. The regression analysis that this tool has used is spitting out some growth cycle positive factors here. Okay, let's keep going. And here we have one of my favorite suburbs. I actually really like going to this area as well. This is now entering the parts of Melbourne that I spend a little bit of time with in my family, especially down on my drives when I go from Melbourne down to Mornington, a beautiful, beautiful part of Australia. You go through Frankston, and Frankston does pop up in our search criteria as an area to look at. It's also on the planning authority's radar. The planning authorities have identified Frankston as one of its growth areas to put in more dwellings, more density, and there is housing there that could potentially benefit from this as well. Again, house prices have not moved, rents are up, yields are up, so what was typically unattractive is starting to become attractive. Known for its beautiful beaches and strong community spirit. No surprise, I really like these areas. Beautiful beaches. As the gateway for the Mornington Peninsula. Yeah, this is exactly why I like it. This is the first sentence that comes up on hashtag. Price analysis around 730,000. Strong yield, decent USAD score, low stock on market, low inventory, relatively short days on market, which suggests strong buyer interest. And there's quite a lot of investor activity there, but fairly weak market conditions at the moment. So again, you have the same story. 7 years ago, price growth was about 17%. 10 years ago, 75%. So Frankston done a little bit better than Fawkner over its 10-year period. But it's very attractive because in 7 years, it's only grown 17%. So it could be time for its next growth cycle fairly soon. The same Melbourne story that we've been talking about. I've added in Frankston South here. This is pretty expensive area now. This is where it gets really, really nice. You've got an average buy price of 1.4 million. 1.335, much lower yield. We've heard some stories from some investors on the ground who we've spoken to, some of our clients that have said that they've bought at a much lower price point inside this suburb, but it is obviously a very big suburb, and as you get closer to the beach, it'll be much more expensive. So it really depends on what you're buying there as well. I've also added in Seaford. I'm pretty sure this is just in and around Frankston, just one suburb north, in our research piece as well, as a potential area to look at, and again follows the same sort of principles to look at. Not much growth over the last 7 years, and has very, very similar frameworks to Frankston when it comes to. So there you have it, a whole bunch of our analysis inside Melbourne. Should also pay attention to the hospital redevelopment project in Melbourne as well. Melbourne is going through a big infrastructure boom. It is going through a big planning, zoning boom. It has some positive factors, some negative factors, but the big positive factor as a property investor is it has not grown very much at all for 7 years. So you are buying today at nearly the same price as 7 years ago in some of these suburbs, 12 kilometers from Melbourne CBD. What I hear here is a little bit of risk prevention, that the price falls have already happened, the period of it doing nothing may have already happened. I do not think that Melbourne's going to do very well in 2025. Our sort of analysis suggests that it's probably going to do pretty poorly in 2025, unless there's a huge wave of investors that all go to Melbourne all at the same time. And even then, Melbourne is so big that I don't think it's going to make that much of a difference straight away, unless the economic improvement actually happens. But with all of this approval data going in, there's less to be said about Melbourne's property boom in 2025. I think we're going to post another sort of year in Melbourne. But if you want to pre-position yourself, you want to invest in property, and you don't want to go look at Darwin, you want to pick an area that's a little bit safe, and you don't want to buy in, all the hotspots, and you don't want to buy in Perth. You want to buy a safe investment in a major capital city in one of the most populous areas of Australia, if not the most populous area of Australia, in a growing capital city that will continue to change over the next 30 or 40 years. It has a lot going for it. We're talking about areas pretty close to the CBD, pretty good areas, established houses with buildings there that produce rental income for about $600,000-$700,000. It's got a pretty compelling story to it long term. That's why you'd look there. If you found this video interesting and it helps you with your research, do me a big favor, hit that subscribe button, and I'll keep producing more and more content like this for you. And one last thing, do you want me to look at a Melbourne suburb in particular and give you my thoughts on it? Put it in the comments below and I'll do a little bit of quick research for it and try and respond to you there directly.